Electric vehicles, all the rage, very popular here in the Valley. California has a law requiring electric-only car sales by 2035.
So we're about 10 years away. Those EVs are well known for saving money on gas.
You bought an electric car to save money on gas. You thought you'd be paying less, not more. Then your insurance company sends you the bill. $354 per month. That's $4,248 a year just to insure your Tesla Model Y. You're not saving money anymore. You're bleeding it. This isn't a mistake. EVs cost 18% more to insure than gas cars in 2026. And if you bought the wrong one, you're paying double what you should. I'm going to show you exactly why EV insurance is a financial trap, which electric cars will destroy your budget, and which ones you can actually afford to insure. The 2026 EV insurance crisis. The top 9 EVs in America cost an average of $309 per month for full coverage insurance. That's $3,708 a year. Compare that to a gas-powered car at $208 per month, or $2,496 annually. You're paying an extra $1,212 every single year just because your car runs on batteries instead of gasoline. And that 18% gap, it's actually getting better. Last year, EVs cost 23% more to insure. So yes, the gap is shrinking, but you're still getting hammered. The average person financing an EV is already stretched thin with a $700 car payment. Now add $309 a month for insurance, and you're at over $1,000 per month before you even put electricity in the battery or pay for registration. Here's what that means for you. If you're looking at buying an EV and you haven't budgeted for insurance, you're about to find out. Your $50,000 car actually costs you $54,000 over 5 years just in extra insurance premiums compared to a gas vehicle. The Tesla Model Y disaster. The Tesla Model Y is the most expensive new car to insure in America in 2026. Full coverage costs $354 per month on average. That's $4,248 per year. Some drivers are paying even more. I found quotes as high as $380 per month for a 2026 Model Y, which works out to $4,560 annually. Why is the Model Y so expensive? 3 reasons. 1. The car costs $61,630 to start, so insurers know they're on the hook for a massive payout if you total it. 2. Tesla uses proprietary parts that can only be sourced directly from them. There's no aftermarket alternative, no competition keeping prices down. 3. Even a minor fender bender can damage the sensors and cameras that power Tesla's autopilot and full self-driving features. Recalibrating or replacing those sensors adds thousands of dollars to every collision repair bill. A 2015 study from the Insurance Institute for Highway Safety found that the Tesla Model S had higher claim frequencies and claim severities than comparable large luxury cars. The biggest cost driver was battery replacement, which at the time was running $16,000. Today, Tesla Model S battery replacement costs between $12,000 and $20,000, depending on the pack size and who does the work. Here's what this costs you in real dollars. Let's say you finance a Model Y for $700 per month, and your insurance is $354 per month. That's $1,054 just for the car and insurance. Over 5 years, you're paying $21,240 in insurance premiums alone. If you bought a gas-powered SUV with insurance at $208 per month, you'd pay $12,480 over 5 years. That's an $8,760 penalty for going electric. Why legacy? EV makers are cheaper. Here's the insider secret that insurance companies don't advertise. EVs from legacy manufacturers like Chevrolet, Honda, and Ford cost 49% less to insure than EVs from Tesla and Rivian. That's not a typo. 49% less. The Chevrolet Equinox EV is the cheapest new EV to insure at $226 per month. That's $2,712 per year. Compare that to the Rivian R1S at $477 per month, or $5,724 annually. Same type of vehicle, both electric but the Rivian costs you an extra $3,012 every single year just to insure. Why the massive gap? Parts availability. Chevrolet has been making cars for over 100 years, and they have dealerships and service centers everywhere. The parts are easy to find, mechanics know how to work on them, and there's competition keeping repair costs reasonable. Tesla and Rivian are newer companies with limited service networks, and their parts are proprietary, harder to source, and more expensive when you do find them. Here's the proof. A gas-powered Ford F-150 costs $258 per month to insure. The electric F-150 Lightning costs $269 per month. That's only a 4% increase. Compare that to Tesla's 18% premium, and you start to see the pattern. Legacy manufacturers know how to build cars that don't destroy your insurance budget. The battery replacement trap. EV batteries are one of the most expensive components in the entire car. Replacement costs range from $4,000 for smaller packs up to $20,000 for large luxury EV batteries. Insurance companies know this, and they price your premiums accordingly. Here's what most people don't understand. If you get in an accident and the collision compromises the battery case, even if the cabin looks fine, many insurers will total the car. They're not taking the risk of a damaged battery pack causing a fire or failing months down the road, so you get a total loss payout instead of a repair. And that drives up claim costs for everyone with an EV. Battery warranties help, but they're not a cure-all. Most manufacturers offer 8 years or 100,000 miles of coverage, and beginning with the 2027 model year, the EPA will require all EVs to carry an 8-year or 80,000 mile warranty. California already requires 8 years or 100,000 miles as of 2026. But here's the catch. Those warranties cover failure, not degradation in most cases. Some manufacturers, like Kia, Lucid, and Hyundai, will replace the battery if capacity drops below 70%, but many won't. And if you're out of warranty, you're paying $12,000 to $20,000 out of pocket. Most people don't have that kind of cash sitting around, which is why extended warranties, specifically for EV batteries, are becoming a thing. Here's what this means for insurance. Insurers look at battery replacement risk, and they charge everyone more to cover the possibility. Even if your battery never fails, you're paying higher premiums because somebody else's might. Repair costs are killing you. Let's talk about what happens when you actually need repairs. EV repair costs are higher than gas cars for almost everything except routine maintenance. Yes, you save money on oil changes and brake pads because of regenerative braking. But when something goes wrong, especially after a collision, the bill is massive. High voltage component replacement, like inverters, DC to DC converters, and high voltage cables, typically runs $1,500 to $5,000 depending on the part and how hard it is to access. Module level battery repair, where they replace sections of the pack instead of the whole thing, can cost $3,000 to $8,000, and that's only available on certain models from specialized shops. Coolant leaks into the battery or physical pack damage from road debris. Costs vary widely and often result in a total loss if structural elements are compromised. And remember, any damage to the battery case is a huge red flag for insurers. The Ford F-150 Lightning exception. Here's the good news. Not all EVs will destroy your budget. The Ford F-150 Lightning is proof that legacy manufacturers can build electric trucks without gouging you on insurance. A gas-powered F-150 costs $258 per month to insure. The electric Lightning costs $269 per month. That's an $11 difference. Over a year, you're paying $132 more for the EV version. Over 5 years, that's $660 total. Compare that to the $8,760 penalty Tesla Model Y owners pay, and you can see why brand matters. Ford has the infrastructure, they have parts available, they have mechanics who know how to work on F-100s because they've been building them for decades. The only difference is the powertrain, and insurers aren't panicking over that because Ford's warranty and service network can handle it. This is the model you want to follow if you're buying an EV. Stick with legacy manufacturers who have established dealership networks and parts availability. Your insurance company will thank you by charging less. The solution: which EVs to buy? If you're dead set on buying an EV, here's your playbook. The Chevy Equinox EV, it's the cheapest to insure at $226 per month. That's your baseline. Ford F-150 Lightning at $269 per month if you need a truck. Those are the two best options for keeping insurance costs reasonable. Avoid Tesla Model Y at $354 per month and Rivian R1S at $477 per month, unless you're making serious money and can absorb the hit. And if you're looking at used EVs, remember that insurance costs drop as the car ages because the insured value decreases. A 2020 Tesla Model Y costs $229 per month to insure for drivers aged 35 to 55, but a 2026 model jumps to $429 per month. That's a $200 monthly difference, or $2,400 per year. Here's the other option nobody talks about: hybrids. A hybrid gives you some of the fuel savings of an EV without the insurance penalty. You're still running a gas engine part of the time, so repair costs stay lower and parts are widely available. Insurance companies treat hybrids much closer to gas cars than full EVs, which means lower premiums. If your goal is saving money, run the math on a hybrid versus an EV. Factor in the purchase price, the insurance cost, the fuel or electricity cost, and maintenance over 5 years. You might find that a hybrid saves you more money than a full EV, especially if you're looking at expensive EVs like Tesla or Rivian. The bottom line: you bought an EV to save money, but if you're paying $354 per month for insurance, you're not saving anything. You're spending an extra $8,760 over 5 years compared to a gas car. And that's before we even talk about the $46,000 purchase price or the risk of a $15,000 battery replacement down the road. Insurance companies charge more for EVs because they cost more to repair, the batteries are expensive to replace, and the parts are harder to find. That's not changing anytime soon. The gap is shrinking from 23% to 18%, but you're still paying a premium. Don't get scammed by the EV hype. Do the math. Know what you're paying, and if the insurance quote makes you wince, walk away and find a cheaper option.